Actually said we're probably not going to be able to show a video, but you guys actually responded to the poll. Which one's the winner? You guys still want to? We might not have time.
They're answering 4, 5, 6, 7. You can see it on my screen. They see all the fun stuff and the answer.
Retirement tribute.
The actual quiz.
Yeah.
Right. That's what we thought. Retirement tribute.
Okay. Are you sure you'd rather watch a video than learn about audits?
Yes.
Yes.
Only because every time we do a training, I always show them my death-defying video. So maybe because it's my last training, you guys want the more emotional tribute?
Yeah, I think that would be a good send-off for you, Catherine.
I can taste the finish line. How's that?
Catherine, if we could see that one music video you guys produced.
Oh my God, the Gangnam FMD, we had fun.
Oh,
We really
fun.
did. Oh my God, it was such a nice ride. Right, Donnie?
You got Edwin singing?
Edwin singing.
Yes,
Oh, I want to see that.
We got
Yes.
Glenn dancing, Gangnam style.
That's a
Right.
classic.
There we go. There you go.
Yep, Gangnam style.
There you go.
You know, it was okay, looks like the retirement tribute is winning. That means I might not be able to give you a test at the end. Don't make me cry, okay? 32 years of service ending here. Let me look for it. They want to skip the test and watch the video instead. I cannot believe the retirement one. I thought they would go for the glider plane or something. I think they're tired of my death-defying adventures. They're tired of it. They think I'm crazy, but I'm probably not doing that, okay?
Yeah, retirement and
All right.
is winning all of it.
All of the above.
All right. If you guys are ready, I'll play it. Okay, hold on.
You don't know how to drive?
You gotta move with style, baby.
All right.
If there's one thing in your financial management system that you don't want auditors to be questioning, is your cost allocation system. You don't want your cost allocation system to lose its integrity, because then what happens? Everything that you're cost allocating gets questioned, because now you've lost their trust. Oh, you say you have a cost allocation procedure, but you're changing it whenever you don't have money here, there's the problem there, there's a restriction there, I move it there. Now I've just lost trust in your cost allocation. Let me run it for you so I can see what my fair share is. For all 8 grants, 21.4 million total awards. We're at 8.7 million expenditures, or 41%.
Cat is the best!
I want a raise.
Yay!
Yeah, I knew this would happen.
Very nice.
So anyway, wasn't that cool?
That was awesome.
That's awesome.
But anyway, thank you. See, I told you you should have watched the glider plane. Oh boy. I thought it was special. Anyway, they played at the retirement party. There was not a dry eye in the house, I think. My mom especially was like bawling. My mom cried a bucket. Okay. Are you ready? Are you ready back to serious stuff?
No, they're still texting, chatting.
Oh, they're chatting? I don't see the chats. Someone save the chats, okay? Because I usually can't, see the. But I might cry. I might cry if I read them. But save them, please, because I don't want to.
I said you are the daringest city employee, but also the darlingest.
I thought it was darlingness. I didn't think it was, but she's both. She's a little bit of both.
Well, it's you guys who really made that public service worth it. At FMD, we're like in the background, but you guys are the ones who are out there. And that's something I never forgot, okay? You guys are doing the direct services, and we're just here to support you. And that's what made the public service worth it. It's all of you. So if I had to delay my retirement to give this final fiscal training that I can do for you, yes, by all means, I will delay it. So thank you so much for making my city career time with FMD the most rewarding of all. So thank you. Oh my God, how am I going to continue the training now? You guys know that, right? I appreciate all of you.
I think you can regroup by poking Mary, Catherine.
Did you like that video though? Oh my God, my goodness.
I think you're still too young to retire. We need to reevaluate everything. There's no way you're old enough to retire.
I
don't think you've reached the cap yet, Catherine.
I agree.
Well, normal retirement is 55 with the city if you have 30 years of service. I hit that when I turned 55 2 months ago. So it's not early retirement. It's actually normal retirement.
I'm sure she's just retired from the city, not work. I'm sure.
There's a lot of adventures I still want to do. I haven't jumped off a building yet. Did my mom hear that? Oh my God. I'm sure I'll find my new purpose. How's that? Probably related to accounting and maybe something completely different. But I'm sure it's a new purpose that maybe I haven't even discovered about myself, but it's a new phase. It feels like I'm breaking up with FMD, and that's the hard part. But, we all got to move on at some point. Maybe 6 months down the line, you guys don't even remember my name. Okay, fiscal reviews and findings resolution around the end of your program year. And now here comes Edwin, or you might be undergoing a single audit. Okay, if you are expending more than 750,000, you are subject to that. So the contents of this last session, just to give you an overview of the fiscal monitoring process for FMD, we'll talk a little bit more about specific conditions. Hopefully we can resolve those deficiencies, and then talk about stand-in costs. And when you cannot resolve disallowed costs by stand-in costs, now we're talking about repayment, refund. Okay, hopefully we don't get to that point, but we'll touch base on those because I do want you to be aware that there's a repayment plan arrangement that we can do to refund those disallowed costs. So some definitions. Cooperative audit resolution. This is actually in the regulation. It's a collaboration between you and FMD, WDD, and even the state or other grantors to resolve those findings. It's a collaboration. That way we can actually find a resolution before we get to a disallowed cost. That's the whole purpose of it. And this is actually starting at the federal level and working with the pass-through entities, the subrecipients and all that to resolve audit findings. This is what it means, a strong commitment by the federal agency and all non-Fed entities leadership to program integrity. Strengthening the partnership and working cooperatively to resolve those audits. Focusing on current conditions and corrective actions going forward. We can't fix what's in the past, but going forward, are we going to be okay as far as those deficiencies that were noted are concerned? This, I want to make you guys remember, okay? When the federal agencies see that there's prompt action taken to fix deficiencies, audit findings, it gives the higher probability that they might be able to offer relief when it comes to those disallowed costs, if they see that you were cooperating and trying to correct the problem the best way you can. It's when you're fighting or you're not cooperating, it just makes it more difficult down the road. And the feds are sending a very clear message that continued failure to correct conditions identified in audits is unacceptable and will result in sanctions. What would those sanctions be? You might never get a federal award again or a city contract again. So what I'm saying is be nice to Edwin. Right? And you guys have always been. You guys have been very respectful towards our auditors, and I really appreciate that. Just a definition here of what corrective actions are. Corrective actions taken by the auditee to correct identified deficiencies so that we can fix them and we can move forward. We're going to recommend improvements. Or maybe you don't agree with the audit findings. Question cost. Cost that an auditor says may have resulted from a violation of a statute or a regulation or a city contract provision. So now they're questioning the expenditures that you said you have incurred for our program. Or you may not have adequate supporting documentation. Okay, remember what I said. Doesn't matter how trustworthy you are. If you can't produce the documentation, it's going to be questioned and probably disallowed if you can never produce it. Or they just appear to be excessive, unreasonable. Okay, giving iPads, that seems excessive. Those kinds of things. Something what a prudent person will do. That's how you would spend government money. And of course, the final state where everything is disallowed, now you have to pay it back. Okay. Fiscal monitoring review. This is what we do. Ideally, we go during the year. This is basically the process in an ideal setting. I actually attach a copy of our fiscal review procedure. So I'm going to quickly just go through the different steps. First, we prepare for the fiscal review. What do? We schedule the site visit with you. We schedule the entrance conference. We prepare for the field work. So before we even go to your site, we're already preparing. We're performing a risk assessment on you. Remember that risk-based approach? We're doing that before we even come to you, because that's going to tell us what kind of audit plan we should have in place coming to you to look at your records. That means we're probably looking at your prior year findings. Did you ever resolve them with us? What is your history on timeliness? Are you in the newspaper? We're doing that kind of research because if we determine that you are a high-risk agency, chances are we will be adjusting that audit plan. It drives the timeline and the audit plan of our fiscal monitoring with you. The field work starts with an entrance conference. That has changed a little bit with the pandemic now where everything is virtual, but basically the same thing where we meet with you. And then the actual review where we're interviewing you, we're looking at your documentation, we're requesting for all kinds of reports. That's really where we're working closely together, asking for documentation here, supporting documentation there, reports over there. That's when it kind of gets challenging for you guys because that can last for a while. And then we issue our draft fiscal review report. We send it to you. There's an exchange process there. Maybe there's some things that you can resolve. And after that, we issue our official final fiscal review report. The final determination, it will include the final resolution report. So now you're responding to our final fiscal review report. Now you have to submit your responses to the official finding. Because you were not able to resolve them, they ended up on the official report as a finding. We will then include our responses to your responses, whether you were able to resolve or what you submitted was not acceptable. We need this, we need that. That's where you kind of see those exchanges in the resolution process. Okay. And then if anything was resolved or if anything was not and therefore disallowed, what will be our corrective actions moving forward? A timeline, approximately 90 days, but I've seen them, Edwin, I've seen them go. And for a number of reasons, our staff resources, and really for the most part, it's you guys responding. Sometimes you don't respond timely enough, and then you ask for an extension. And because we want to accommodate you and give you the opportunity to resolve everything, we keep extending that. So ideal situation is 90 days, but I've seen it go a couple of years, really. Any questions so far? For workforce programs, keep this in mind, work source centers, youth source centers, service providers for LA Rise Summer Youth Employment Program. FMD reports to the board whatever disallowed cost we determine from your audits or fiscal reviews. So keep that in mind. And those meetings are public. Okay. The last time that I reported on this was back in, when did I report? November, just last month. I had to report on this agency has disallowed costs, and then I have to give an update. It makes them nervous when they see a high amount of disallowed costs, because it means for them, there are funds that never made it to services in the form of services to continue the purpose of the grant. So they never like those. You, however, have the right to appeal. The subrecipient may exercise its appeal rights in accordance with the rules and regulations for the grant affected. WIOA, they have a very specific complaint and grievance procedure. Not sure about CDBG, Jackie. But for the most part, for the workforce programs, we are actually following the WIOA rule on this. If we're not able to resolve it at that informal resolution and you want to go a next step, you can ask for an administrative hearing. Now there's going to be an admin hearing officer presiding over the findings. And then if nothing is resolved in spite of those phases, now you're paying. We want an immediate refund. If you don't pay us right away, we will probably, most likely, withhold it from any future cash request where there's an amount due from us to you. We will withhold it from there. If we're not hearing from you, and maybe you're willing to pay, but you just cannot afford to pay the lump sum, now you let us know, may we request for a repayment plan where you actually paid in installment payments for a certain period. Or you may propose stand-in. What I usually like to see is the stand-in. That's where the stand-in cost really comes into play. And that's why I think it's important, because it means you don't have to return the money. If you actually have stand-in costs that would meet those criteria so that you can substitute and you don't have to pay back. So a lot of you guys ignore that stand-in because it's a very small portion of the expenditure report, but it's so important. What that means is this whole documentation and recording happening in your organization so that you can actually exercise that right if you have disallowed cost. Okay, so let's talk about specific conditions first. As you know, we are evaluating you to determine the risk that you pose for our program. We use the risk-based approach. So in doing that, we're looking at your financial stability. We're looking at your financial statements issued by the single auditors. We're looking at your management system and standards, your history of performance with the city, or maybe with other departments. We have other departments sometimes who are inquiring about you because they're considering an application from you. And we are looking at current and prior audit reports and findings. Even if you had resolved them, how long did that take? Were you cooperative? Were you not cooperative at all? Was it confrontational? All those behaviors come into play when we're evaluating you. Do you have the ability to effectively implement requirements? Your history of compliance. Did they meet performance goals? So then we will be asking Jackie or Donnie or Makita, how are they on performance? Because we do want to put that in our consideration as well. And a responsibility determination. If necessary and corresponding to the degree of risk assessed, a federal agency or the city may apply specific conditions to the federal award. And you know what those mean, right? We went through that in the regulations. So I want you guys to remember specific conditions from now on. If you guys are not familiar with that, remember that one, because it's our attempt to work with you so that we can fix the deficiency and we don't get into, what's the worst part? The remedies, right? Now we're talking about termination, suspension. We don't want to get there yet, okay, until we try with specific conditions. So what are those conditions? Sometimes we would require payments as reimbursements. We're going to stop your advance privilege. We can withhold, maybe not for workforce or CDBG, maybe we can withhold authority to proceed to the next phase until you complete your performance for where the deficiency is. This is what we do often, because I think it's what most fiscal folks can do. We require additional, more detailed financial reports and supporting documentation. General ledger. I want to see your payroll register. I want to see your cost allocation, because I'm trying to see, did you fix your cost allocation issue? Show me. Every time we see a cost allocation finding, you will probably be put on specific condition. We may require additional project monitoring. Maybe Donnie would go there bi-weekly instead of quarterly, depending on the nature of the deficiency. Or you may just need technical assistance. That's certainly something that we always provide at FMD, one-on-one, that you can get from grants management, Glenn's team, and Edwin and Steve. Okay, your auditors. One thing I made sure of is that they're very much knowledgeable on regulations. If there's anything that regulations, I made sure they're trained on that topic. Or if they don't know when you ask them, they will know where to find it. So do not hesitate to ask them if you ever need guidance on the financial aspects of your grant program. Or your program monitors may just say, okay, before you do anything, I want to approve it first. They may establish those restrictions where you have to ask them every time before they approve it. When we impose specific conditions, we are required to notify you in writing. So you will get a letter from FMD saying, because of this, this, and this, we are imposing the following specific conditions on you. We want to receive a report on this quarterly. We want copies of your payroll tax returns, whatever that is. You will get a letter from us. Okay, it will explain the nature of the additional requirements, the reason why we're asking it. And remember, we will not be putting you on specific condition if is that something that we do to just punish you, you think? We're nice people at FMD, you know. We do this because there was a deficiency to begin with. We are reacting to it. Okay, so it's not something that we make just to make your lives difficult. It's because we saw a problem and we're trying to fix it if you want to continue with the city contract. The nature of the action needed to remove the additional requirement, the time allowed for completing the actions, and the method for requesting consideration. So what that means is we will tell you in that letter, okay, from now on, effective immediately, we want you to submit this additional reports quarterly for the next year, because that's what we think is reasonable to make sure that gives you time to fix the problem. But during that time, if we see that you're complying, we might just cut that short. Or if it's taking too long and you request FMD, if there could be a reconsideration of the specific condition, and maybe we might just lift it. Any additional requirements must be promptly removed once the conditions that prompted them to begin with have been satisfied. So we certainly don't want those specific conditions to be going on forever if we see that you're cooperating and you're complying. And that's because we don't want to get to this point. I'm going to go through this again. We don't want to be withholding payments to you. We don't want to be disallowing costs that you've already actually spent money on. We don't want to suspend or terminate your contract unless we have to. We don't want to initiate suspension or debarment proceedings, or maybe from you getting any future contracts with the city, or whatever remedies that we think will be legally available at that point. So that means when we get here, we have exhausted our specific conditions efforts. The federal awarding agency must provide you guys an opportunity to object and provide information and documentation challenging the suspension. If we decide to suspend or terminate your contract, you should be given an opportunity to object or to provide additional information. Costs incurred by an NFE, okay, make a note of this. Costs incurred by you guys, okay, during a suspension or after termination of award or city contract are not allowable unless they meet the following conditions. They were costs that were expressly authorized by the federal agency or the city, or the costs resulted from financial obligations which were properly incurred by you before the effective date of the suspension or termination, and they're not in anticipation of it, okay, then maybe they would be allowable. Costs would be allowable if the federal award was not suspended or it expired normally at the end of the period of performance in which a termination takes into effect. What would be an example of a cost that you might incur at termination? It's very rare that this happens, but maybe Jackie or Donnie or Makita would have an example for this because I don't. No? Okay.
Sorry, put on the spot like that. I'll think about it in a little bit, but yes.
I love you, Jackie.
Think about
I
it
think of something right now, I will do it. But Donnie, I think he has the answer.
No, I got to think about that one too.
Right?
I'm still emotional from that video. Sorry.
I mean, after you terminate a contract, why would we allow anything after we terminate, right? But they're actually in the regulations those conditions where it might be allowable. And I mean, preparing for this, I'm like thinking, what would those be? And I honestly could not think of anything. And that's why I put my lovely program monitors on the spot. Maybe they know. Sorry, guys. What about Makita? Did she know?
I was just saying that I was thinking about it as well as I was reading it and thinking, because if it's something that they already itemized in their budget beforehand, and perhaps it happened after the fact, after the contract was terminated, but even then, wouldn't they have already submitted for the reimbursement? So I really was thinking about it. I couldn't think of.
Me too. I'm struggling with this one, but just know it's in the regulation. Okay. If you ever have to suspend or terminate your contract, that's what it says. As a policy, the city implements these regulations for all our programs, whether it's federal or city funded programs. This is what we do on specific conditions. The Financial Management Division conducts the risk-based evaluation of applications pre-award, meaning when you guys are applying, they're actually sending those applications to us so that we can look at the financial aspects of it. Mm-hmm. So we are actually doing that pre-federal award procedures that the uniform guidance is describing. Remember Subpart C, I think is what that is? We're also doing the same thing. And we're also doing a risk assessment of each service provider prior to and as part of our fiscal monitoring process, meaning post-award, right? After you get the award from us. So we are also doing the same thing. So just because you see federal, that means it's what we were also doing as a pass-through entity. And remember, your city contract section 801 has this language. If the subrecipient fails to comply with its contractual obligations, including providing necessary fiscal documents to the city in a timely manner, the city may withhold the release of funds to the subrecipient. So something like that, where we're asking for documentation and we're not hearing from you, we can actually withhold the money at that point. I think I have a question. Well, Catherine, what authority do you have? Well, it's in your contract. It's right here. Okay. Just wanted to remind you of that if you guys have forgotten about that section in your contract. The authority to lift the specific conditions solely rests on EWDD. And only after FMD determines that the subrecipient has fully complied with the specific conditions imposed, has fully implemented all corrective actions to fix the deficiencies, only then would we lift the specific condition. It will come from us. We do a review of these conditions every 6 months, ideally, to see, well, maybe we can lift it now. But I do admit that because of staff resources, we haven't been able to do that. So if you've been on a specific condition for a while now, contact Edwin. And maybe it's just because we haven't been able to do that compliance status review because we've got 5 vacancies. So we do that at least every 6 months, ideally, or when a subrecipient requests for a status review. Common reasons for specific conditions. This is what gets you in trouble, usually. When you have a repeated finding for multiple years, we see the finding over and over again. What does that mean? You're not fixing it. You're not implementing the corrective action that you said you would. So now if we see it for a couple of years, you're going to be put on specific condition. And what would those conditions be? See, right now, we're still at specific condition, not the extreme option. We're just going to require you to submit GLs, your reconciliation reports, maybe additional documentation with your financial reports, with your expenditure reports. If you have a cost allocation finding on personnel costs, we see this a lot. When we see that you have unacceptable cost allocation procedures, or you have no cost allocation at all, that flags it for us. The specific condition would usually be, we're going to ask you to submit timesheets, payroll registers, activity reports, labor allocation schedules. Payroll taxes are delinquent. Remember that part of your certification that you're signing off on, and I highlighted it for you, reminding you that you're certifying that you are timely with your payroll taxes. And we don't actually ding you right at the first instance. It's when we see it happening for multiple years. And okay, now we're stepping in and we're imposing specific conditions like what? We're going to ask for a copy of your federal form 941 and your state form DA9. Okay, we want to see that you're filing. We want to see a record of your payment history at IRS. And usually what we want to see is the record from IRS and EDD, not your records. Mm-hmm. Okay, bank statements showing payment transactions. And those are fine. You could see maybe a transaction in your bank. Oh, it looks like they transmitted it to EDD. But sometimes those wire transfers get canceled for whatever reason. Maybe that's the amount that you are transferred, but the amount that's due is actually bigger. So unless I see the IRS record where it shows the amount that's actually due versus what you've paid, that's why we're asking for the federal transaction history as opposed to just yours, because that's really the ultimate confirmation that you've paid your payroll taxes. Okay. And then we want to see a bank statement and reconciliation of what you say was paid in IRS. We're reconciling your bank records with what IRS and EDD are showing in their system. So this is kind of painful. We do have agencies that are going through this right now. Or you might have admin costs where you're repeatedly misclassifying admin into program just to avoid the admin cap. We're not as strict in the beginning. We're going to give you technical assistance maybe. But at some point, that will get tougher than just technical assistance if we see it over and over again. You can't tell me that you don't know the definition of admin because I spend hours on this explaining every time we do a fiscal training. Single audit fiscal concerns. We look at those, and when we see going concern assumptions, that's the auditor saying it's doubtful that you will be able to continue your operations because of financial stability. Well, those are red flags coming up. Because how are we going to contract with an agency if we're not sure you're going to be able to continue operating? That's automatic red flag right there. Or if your auditors had issued an adverse or qualified opinion or had serious findings that are related to our programs. So we are actually really looking at those. And if we see any concerns there, specific conditions might be submission of additional reports or documentation. Maybe we want a regular update on implementation of corrective actions. Maybe we would withhold your payments, suspend cash advance privilege, maybe technical assistance. Or maybe we would go to executive management or to the workforce development board, and FMD would then recommend termination of your city contract because we have fiscal concerns that we cannot resolve. It can go that far. Or we could recommend suspension of not just your city contract, but also future funding, especially when we have those going concern financial stability issues. That's what we're recommending. Do not contract with this agency. In the last 2 years, FMD has imposed specific conditions. So far, we have 8 who are in specific conditions. Out of those 8, 1, we actually lifted it in less than 6 months because they quickly cooperated and we were satisfied that they'll be okay. 1 took 2 years. And there are 6 that are currently ongoing right now. I guess with the number of agencies that we have, 8 on specific condition, maybe I'll be happy with that. But ideally, I would rather not have any agency with specific condition, especially after the training you got from me, right? Stand-in cost. If the auditee can't resolve it, it's definitely unallowable, or decides to contest the finding, the auditee may propose the use of stand-in costs as substitutes. Meaning this disallowed costs, you are now proposing to replace them. Proposal should be included in the audit resolution report, but the stand-in cost will only be acceptable if you meet the certain conditions. You cannot just say, oh, Catherine, I have stand-in costs here. I can show you in my ledger. See, I paid for an accountant. I never billed you. I paid for a case manager. You use this facility for a program. I never billed you for that. Oh, your word is good. But what do I ask? Proof. Yeah. Show me. Okay. There's something that you always hear from me and Edwin, Steve, show me. Your word is good, but show me. Right. And it's limited to the same entity that incurred the disallowed cost. So what are those conditions? The criteria that you have to meet. They must have been incurred for the benefit of the grant program. Say your disallowed is in WIOA. You have to show that your stand-in costs that you're proposing were actually costs incurred for WIOA, not for CDBG. They must come from the same year as the cost they are proposed to replace. So if their disallowed cost is 2021, your stand-in cost should have been incurred in 2021. They may not cause a violation of admin or other cost limitations. So if you're already at your 4% cap, now Edwin disallows some of your expenditures. Say, well, Catherine, remember I have admin costs that I never billed you for. Can I use those? You're not going to be allowed to use it because if you add them, they're going to be disallowed anyway because you've already reached the cap. So they should not cause a violation of those restrictions. Keep that in mind. So that means you can only provide stand-in costs that are programmatic, because in admin, you've already reached the cap. That's what that means.
So, Catherine, may I ask a question about standing costs?
Uh,
Does the standing costs, say you have program costs that are disallowed, so the standing costs have to be programmatic. They have to replace, they have to stand in for program costs. You can't use admin costs to stand in for program.
You can, right? If you still have room in that cap.
Oh, you still have room in the cap.
So you have a 4% cap. You got disallowed for program, but Catherine, I've only charged you 2% of admin. Let me charge you my admin that I never billed you for.
Okay.
So then it will be acceptable. If you're already at that cap, you cannot add on to it because it's going to be disallowed anyway because there's a cap.
Yeah. Okay. I got it.
WIOA is a little bit more challenging just because of that WIOA cap. I was hoping I would retire and I would be able to say that there's some kind of flexibility on that. But from WIA to WIOA, it's still the same 10%. I never saw the light of day on that issue.
Yeah.
I never saw the light of day. But hopefully what they're talking about is, Gerardo did not visit us today, but one of the things that they're discussing is maybe for the funds that are not federal, like where the city may have a little bit more flexibility as far as what cap to impose.
Right.
They might be close to a consideration of that happening. And that's possible if the city decides to do that. But for WIOA, we are stuck with that 10%. There's no room there. There was actually an allowance where, because of the pandemic, Department of Labor said certain costs are allowed. Even if they make you exceed the 10%, it should be okay.
Oh, okay.
The Fed said that, right? So now I went to the state. It looks like they're going to allow us to exceed 10% if we can show that the admin was as a result of COVID, the pandemic. Now you're over the 10%. Will you allow us? Guess what the answer I got was?
No.
Yeah. So that means I couldn't do it for you. I actually contacted the state and I even showed them the regulation where it says that in anticipation that you guys might actually have admin costs that's COVID related, but you exceeded the 10% and maybe you can charge us, but I got no answer. So you can't say that I didn't try. And that's why we didn't even tell you about that regulation because I got a no answer. I actually waited until I heard back from the state before I was going to tell you. I was hoping for good news, but I got a no. There's the question.
Sheila first. She got her hand up.
Okay. Sheila?
Oh, hi. What if we have reported leverage costs that's paid by the corporate? Can that be considered stand-in cost?
Only if the leverage resources meet the criteria that I just talked about.
And we have to run that with the monitor first too, right?
Depending on where did you actually have that leverage resource spent on the WIOA program where you incurred the disallowed, maybe you have to go through this criteria. You have to meet all of them. Were they in your records showing that it benefited WIOA? You actually need to show it in your records. And that's why I want you guys to be mindful when you're incurring stand-in costs. Be careful about documenting them because you might just need them. Okay. But if you don't need them as stand-in costs, then they could be leverage. But leverage has a wider, broader of where they're coming from. Stand-in is a little bit more specific because guess what? Because you're substituting what we disallowed. It becomes part of your regular budget now. So I'm still going through the criteria of what would allow a stand-in cost. They should be included with the scope of the single audit, not necessarily tested, but potentially subject to testing, meaning it was part of the population that your auditor chose from to select the samples. They are recorded in your financial statements. The stand-in costs are paid for by what? Non-federal funds, right? Because you cannot charge it as stand-in cost if you already charge something else. So in your records, you need to be able to show that they were paid for by your private funds. And then how do you show that it benefited the WIOA program? So be very careful about documenting that so that when Edwin says, okay, let me see your proposal, you can actually show him. And maybe you don't have to return that money. They must be accounted for in the financial system. Okay. They're just like a regular grant expenditure.
Yeah.
If you were to substitute, they would pass. Okay. When you're documenting something, put as much information there as possible so that if an auditor is hovering over you, and I always tell myself, if an auditor is hovering over me and trying to see how I came up with this report that I submitted to her, that I wouldn't be sweating. Right. So keep that in mind. Should we spread stand-in costs between admin and program? Yes. And that becomes important if your disallowed cost is either admin or program. Remember, you're replacing it. Your stand-in cost must be able to meet all the requirements that were imposed in that program where you incurred the disallowed costs.
I have a question, Catherine.
Uh-huh.
Is there a maximum that is that we can report as a stand-in cost?
No, nothing. If you're incurring stand-in costs, I say put it in that expenditure report. You never know what your disallowed cost will be.
Okay, thank you.
Yeah. And a lot of you are probably doing that. You have your own funds because WIOA dollars have been going down. Some of you are probably fronting some of that. Running a grant program comes with sacrifices. You don't always get full reimbursement for everything that you're actually incurring. That's just the cost of doing business with the government. My favorite line. So if there's anything that you don't get reimbursed for and you did not charge another federal grant, it might qualify as stand-in, then document it as such. You might just need it. Question from Aris. If a staff is 100% working on an EWDD contract and direct costs, let's say their employee fringe benefits was not charged, will that qualify? Yes. So if the direct salaries of an employee working exclusively on EWDD project, but for some reason you never charged me the fringe benefit portion of that employee, that's stand-in because that's completely allowable. Assuming that the fringe benefit is in your personnel handbook, that's the fringe benefit that all your employees are getting, right? For some reason you did not charge me.
Yes, that's correct. Thank you.
Catherine, I have a question, Maria Nieto.
Hi.
Hi. So what if an employee is working only 90% on this government contract, but for the period of the grant, he or she end up working 100%? Can I put 10% of her salary in standing cost?
Yeah. And you are only able to charge 90% of the grant, right? If you're able to support that 10%, yes. And maybe you will have a timesheet saying, okay, 40 hours Henry worked on this project, but see, I only billed you 80% of that. So that means that 20% of that is stand-in costs. You benefited from it, but I never charged you. So keep the documentation for that.
Okay, thank you.
Okay. Yes, that's stand-in. Was there another question?
Yeah, what are the examples of admin costs versus program costs?
From CLA, SEE, and then LA, Valeria, they can be different from grant to grant. WIOA has very specific rules on what's admin and program, and they do that because they have such a low cap of 10%. CDBG has a higher cap, but their definition of admin, though, includes so many other costs that would have been programmed for WIOA. So those are dictated by the regulations of the grant that we're talking about. Now, if they're not federal grants, for workforce grants, workforce is really following WIOA definition. So if it's a city SYEP or LA Rice Homeless Program, we're really following the WIOA.
Catherine, a CLA is a CDBG program, so they're not asked to break down admin and program at this time.
So you're okay, but that's not to say that the program monitor should not be looking at what you're spending on admin, even if you don't have a cap. If I were Jackie, for example, you don't have a cap, that's fine. But if I see that half of my budget is paid for executive management, that's just a red flag right there that, I don't have, I cap you, but what is this? That's just their job or due diligence as a program monitor.
So, yeah.
Spending so much on admin, even if you don't actually have a cap.
In other words,
It's
a red flag if you're spending way too much money on salaries for your own overhead and staff.
Is that Rosa?
No, I think that was Valeria, but yes, you're right. It is a red flag if we see it's the grants are supposed to benefit the participant.
Exactly. Okay. Yeah.
So at the end, like if you keep that in mind, like how is this benefiting a participant? That's like the general rule of thumb. So, but yes, we would flag something if it has excessive admin.
So don't get too confident just because you don't have a cap, okay?
No. Yeah. And
we are still looking at it. Yeah.
And for other programs, they're very strict on what's allowable for other departments. So we just tend to follow that template. Like we don't go excessive on the staff, on the personnel costs.
Even LA County grants, when we get WIOA discretionary grants, that admin limit is always there. They want the funds to go to program. Seriously. To me, sometimes there's that misunderstanding that admin people are just as important, right? You think our workforce programs or economic development programs would run if FMD wasn't there. yet we're considered admin and there's a cap on us. For me, at least in my eyes, that's not fair. We're just as important, but that's just the reality of federal grants because they want those funds to benefit small businesses, the participants, the unemployed. That's where they want the money to go. So for the most part, for example, for the city is really eating a lot of our admin costs because of the caps in all our funding sources, WIO especially. What's not allowed to stand in cost? In-kind contributions. I might need Red's help here. Uncompensated overtime. See what we were talking about? You had somebody working 10 hours extra over 40, but you never paid them, right? That's not allowed as stand in because you never paid them. It's something that you kind of just arrange off the books. That's not a stand-in cost. Unbilled premises associated with fully depreciated facilities. Allocated cost derived from an improper allocation methodology. It's almost like the factors affecting allowability you are now applying to stand-in cost because you're proposing to replace them. Okay, discounts, refunds, and rebates are not stand-in costs. Those should have been sent back to us to begin with. If the cost of the disallowed cost was fraud, the city will not consider proposals to use stand-in. If the cost of the disallowed cost was fraud, that's the end of the line for you. I don't care if you have stand-in costs. We will not recommend accepting whatever proposal you have if it's fraud. Now, if you don't have any stand-in costs, now you have to pay. If you can't pay lumps, I mean, this is what I see a lot, especially if it's a significant amount. Can we pay it in installment, please? Now you have to submit that request in writing and submit it to our general manager. The repayment plan is an agreement between us and you describing the terms of that installment payment. There's actually a schedule. Say you're going to pay me on the 20th of every month until full refund of that disallowed cost. Non-compliance with the terms and conditions of that repayment plan will result in the remaining unpaid balance becoming immediately due. Now I want all of it. Forget about the repayment. I want all of it. Or an equal amount to be withheld from any payments that we might be in the process of paying. We're going to withhold those and take the disallowed costs from there. Okay, that's it. And then the subpart F, audit requirements, the uniform guidance. There's a section on your handout where it talks about the requirements for single audit, what your responsibilities are when you're procuring CPAs to do your single audit, what the auditor's responsibilities are when they're conducting a single audit for you, all that good stuff in subpart F of the uniform guidance, which I intentionally did not go through in detail, but it's stuff that you still need to know. If you are expending $750,000 or more of federal money. That's it, guys.
No.
Very good.
I like it, Mary.
What did you say, Mary?
No.
I think Mary wants another lesson after we all.
Yeah, I even ended early, but that's because I'm canceling the test, right? We actually have a short quiz on audit, but I figure at the end of the day, you're probably tired. So I will just send you those questions with the answers. But please read subpart F, okay? Because you are going to be held to that. When you don't do your single audit, what do we do? You're an audit sanction, guys. Audit sanction, not $1 released to you once you put on audit sanction.
Catherine, a reminder, we have the big prize.
Oh my God. Yes, thank you, Rose.
Yes. About that, $50, everybody.
Go ahead, Rose. So we have one more $50 gift card to give away. Go ahead, Rose.
So Catherine, on my hand, okay, how many pages? 3 pages, double pages. 6 pages with 222 attendee, okay?
Wow.
There's a lot of people register.
Cool, man.
So I'm so proud of you. You did a very great job. Very great job. Hey. I know, right? I need to start them from you now.
The signature swag.
Exactly. All right. So we have 222 people on this list. So Catherine, will you please randomly pick one of your favorite number? And just telling everybody, Catherine doesn't know who is the number associated to the name, okay? So just
what number is Marion?
That's why I cannot tell you that.
All right, my favorite number when I turned 55, eligible for retirement, 11.
11, okay.
October 11.
So 11. Are you guys ready?
Mm-hmm.
The person who is going to receive the $50 gift card is Esther Martinez from UCLA, the fund manager.
Is she here?
Wow,
Is she here?
Mary.
Yes.
You were rewarded, Mary.
She's here, Mary.
I was told, so I'm here.
Oh,
There she is.
Wow, Mary.
What
Your
gift card
camera
is
and
it?
everything.
She's gonna have to share that with me anyway, so.
Oh, good.
What is it? Is it a Visa card, Rose?
Yes, it's a Visa card, $50 Visa card.
Oh, yes.
All right?
yay.
We'll have
Congratulations. Congratulations.
Maybe Mary could give another $50 gift card out of her pockets.
Oh, come on now.
Got a one-on-one
Only if I
match.
can use it for stand-in.
I mean, after what I put her through, I'm asking her to shell out $50.
Are we gonna take a picture, Catherine?
Well, I don't know how that can you guys indulge me with the picture, please, so I have a souvenir. Okay. I don't know how to do it. Kayo, how do you want to do?
Okay, let's see.
Okay. I think I can see. Okay. In this frame, I'm in it. I want I will count a victory sign. 1, 2, 3. Good job, guys. Next screen. Everybody a wave. 1, 2, 3. Wave. Look happy. Oh my God. Look happy. There you go. You just survived 2 days. All right. Very good. Next screen. This one. Get this one, guys.
Wow.
This one. Okay. You have to indulge me. Elandra, I'm looking at you. You do the shoulder swipe. Okay. 1, 2, 3. You guys gotta learn the swag. There's a particular swag on how you do that. It's not like that. It's like, right?
Signature swag.
Next one will be what will it be?
Awesome, right?
Why is everybody's cameras close on this one? Okay, then just a thumbs up. One.
Thumbs up.
There you go. They're turning them on. I love you guys. Okay, turn them on. I want a thumbs up. And I won't post them. This is just for my souvenir because I want to remember you guys who stayed with me for 2 days. Okay, they're still turning them on. I want a, what did I say? Thumbs up?
Thumbs up.
Thumbs up.
Bye, Johnny. You didn't speak. You had a question, but you didn't speak. But at least now I see you. There you are. Bye, Johnny.
Enjoy your new life.
I will. The MCS group. Is that a picture or is that really them? Is that oh yes. Hey, thank you for so they were counted as one, but there's actually 2 or 3 in the room. So thank you guys. Say hi to Tito. Bye, Carol. All right, guys. Finish line.
That's awesome, Catherine. Thank you.
Yes.
That's awesome.
Yeah, that was pretty good.
Congratulations, partner.
Yeah.
You did a good job.
So guys, we just pulled off the first virtual conference, and according to Andrew, it's the biggest group ever for any virtual event. It's the biggest ever. We just pulled that off, and I want FND to be proud of that. Carry the swag for the rest of the year that we just pulled this off. Okay, thank you guys for bearing with me. I know I kind of disappeared for a whole week. My mom is here just because she hasn't seen me for a whole week. I'm locked in my room. My husband bringing me food because I'm moving from my, and of course you guys probably needing something and I haven't been able to respond, but hey, we pulled it off.
Yeah.